Welcome back. In this section, we'll be using this template to calculate depreciation in various scenarios: purchase, sale, what if we sell the asset which we have purchased in the year, what if we sell asset before its useful life, what would be profit and loss, and so on. So I'll be inputting some dummy asset details. So we have total 7 assets. I'll be inputting useful life of the assets. I will put some random useful life of the assets. As you can see, this is a straight line method of depreciation. So depreciation percentage is calculated automatically, which is nothing but 1 divided by useful life of the asset. So in case of first asset, it is 1 divided by 5, second asset 1 divided by 6, third asset 1 divided by 3, fourth asset 1 divided by 8, and so on. Let's input some purchase dates. I'll be inputting some previous year's purchase date as well as current year purchase date. Now let's input some purchase cost of these assets. As you can see, daily depreciation is automatically calculated, which is nothing but purchase cost divided by this period, that is end date minus purchase date. As you can see in column I, which is sale date, the date is copying by default from end date column, which is column F. This is important to have this model to work properly. Now let's go through other columns as well. For time being, we're going to assume that we're not going to sell any asset in the year. As you can see in column L to O, gross costs are automatically populated. Asset 1 to 4, PM1 to PM4 are purchased before 2016. So therefore they have opening balance in column L, as you can see. While asset 5 to 7 are purchased in 2016. So they will be showing as addition in the year in 2016. Closing balance is nothing but sum of opening balance, addition minus deletion. Since we have assumed there is no relation for time being, there would be nothing in deletion column. Let's move forward. As you can see, depreciation is automatically calculating here. All the assets which are purchased before 2016, they have a full year impact in 2016. But for assets which are purchased in 2016, has impact in 2016 as well. So for example, this asset PNM5 has been purchased in 12 January. So we have impact of 19 days depreciation in column O15, which is $65, which is exactly 19 days of depreciation. Beyond that, depreciation is calculated based on the days in the month. Since this is a leap year, there would be additional day in February, so depreciation would be higher. But for other days, depreciation is calculated according to the days, 30, 31, and so on. The asset which has been brought on 30th April, depreciation for the same starts from 1st May, which is for the full month. Similarly, asset which has been bought on 31st May, the depreciation will start from 1st June, as you can see. Since this is the first year of the model when you start using it, opening balance depreciation is calculated with a formula. As you can see, all the 4 assets, PNM 1 to 4, which has been purchased before 2016, has opening balance accordingly. Additional expense is nothing but depreciation for the year, which is sum of Jan to December. Since we have no disposal or sale in the year, there is no deletion here. Closing balance is nothing but summation of opening balance addition minus deletion. Net book value is nothing but difference between column O and column AF. Now let's try to sell some assets in this year. We'll be selling one asset which is acquired before 2016, and we'll be selling 2 assets which is acquired in 2016. So let's take second asset, which is PNM2. It has purchase cost of $65,212. Its end date is 30th April 2019. Now this column is taking value from end date, but in case of sale, we have to overwrite this value by entering sale date manually. So we'll be assuming that we are going to sell this asset on 31st May 2016. As you can see, it has been highlighted in red. This is to inform the user that there is a sale of asset in the year. Now once you add date manually here, you are expected to put value here. If the asset has been sold for nothing, you have to put 0. You cannot keep this column blank like this. So let's assume we have sold this asset for $25,000. As you can see, the loss has been calculated as $6,683. This is calculated comparing sale value with the WDV. As expected, the total cost of this asset has been credited as a deletion in gross cost block. 65,212 is being credited 65,212 here. And closing balance is nil. Since we have sold this asset on 31st May, the depreciation has been calculated for full month in 31st May. After that, from June onwards, there is no depreciation, which is how it's supposed to be. In column AC to AF, as you can see, we had opening balance of WDV, then we had depreciation for 5 months, which is nothing but Jan to May, which is 4526. Now we have to delete this depreciation as asset has been sold. So it will be nothing but sum of these two, 29003 plus 4526, 33,529. And that closes the account for this asset, as that book value is 0. So what would be the accounting entry for this transaction? First of all, you will be debiting cash balance, which is $25,000. You will be debiting your profit and loss account with the loss 6683. You will be debiting your accumulated depreciation with 33529. And at last you will be crediting 65212. Now let's do another sale transaction where asset has been acquired in the year, which is 2016, and sold in the year. What happens then? So this asset PNM5, which is bought on 12th January 2016, has been sold on 30th June 2016. We're going to sell this asset for $5,000. As you can see, it has a loss of $7,000. Similarly, in column L to O, asset was bought in this year, so it has addition, but also sold in this year, so it has deletion. So this column has automatically calculated this adjustment. Similarly, depreciation was started from 12th January. And since the asset is sold on 30th June, the depreciation is automatically calculated. Note that even if I put the date randomly for within the month, suppose 15 June 2016, accordingly the depreciation will be calculated for 15 days. For the rest of the year there should not be any depreciation, that's why model is not calculating anymore. As expected, there is no opening balance as this asset was bought in the year. But whatever depreciation we charged, 534 has been credited because that was the only accumulated depreciation in the year. And asset account is closed, so net book value is 0. Accounting entry would be similar as I explained before. Let's try to sell an asset with a profit. This asset has very long useful life, but even though we will be able to sell it profit, let's try to do that. Let's try to sell this asset on 31st July 2016. Or $15,000. Now we have a profit of 4,006. As expected in gross block, asset has been closed with the same cost value. Similarly, depreciation was only calculated for 3 months as the asset period was with us for 3 months only. Depreciation for 3 months was $258 and it has been closed as it is the only accumulated depreciation we have. Similarly, asset account is closed with the nil book value in net book value column. The accounting entry for this profit on sale of asset would be bank or cash account debited with $15,000, accumulated depreciation account debited with $258, profit would be credited with 4,006, and asset cost account gross value will be credited with 11,252. So as you can see, with this model it is very easy to determine profit or loss on sale of assets. With some few entries in this model you can determine accurate profit or loss and also adjustment entries. In next section I will walk you through how to add one more year in this block. What happens if we add next year and how this model will behave in next year. We will keep these same examples in this place and we'll work accordingly.